In this lesson, we'll be examining both personal automobile policies and business and commercial auto insurance. Since the two types of insurance are distinct, we'll separate them into their own sections of the lesson. We'll begin with personal automobile insurance. Remember that the words automobile or vehicle include vans, SUVs, and pickup trucks. This means just about any passenger vehicle licensed for road use and with a gross vehicle weight of 10,000 pounds or less. Obviously, personal automobile insurance is for private use of a vehicle and will rarely, if ever, cover business or commercial use of a vehicle. The first part of the lesson will focus on some of the definitions used and the liability sections of the contract. As you already know, liability coverage protects other people, and in this case, when an insured is at fault in a crash and causes injuries or damage to the property of others. We'll look at the different ways an individual can purchase liability coverage, either as a split limit or combined single limit policy. You'll learn that all states require what's known as the minimum state liability limit. This is the minimum amount of coverage that must be enforced for a vehicle owner. In addition to discussing what occurs when a client is at fault in an accident, we'll explore coverages that protect the client and the occupants in their vehicle if they're hit by a person who doesn't have insurance. This is called uninsured motorist bodily injury coverage, and it's required in most states. An associated optional coverage is uninsured motorist property damage. This will pay for damages to a client's vehicle if it's hit by an uninsured motorist. This would be especially important if the client's vehicle only had liability coverage and no collision protection. The section will also define a covered vehicle. You'll learn that it's not just a car that a client or their family member owns. It can be a temporary substitute, like a rental car. There are also other possibilities where coverage may apply to a vehicle that isn't necessarily owned by the insured policyholder. In closing this section of the lesson, we'll detail medical coverage sections of the contract. This will look at medical payments, which essentially provide medical benefits as part of the coverage. We'll also discuss personal injury protection, which is an enhanced package of coverage centered around injuries and deaths sustained in vehicle crashes. Finally, the concept of subrogation will be explained. This is the process by which the insurance company will seek recovery of claims amounts paid from the person that caused the loss. This is known as the right of recovery. Once an insurer has paid an insured for a loss, the company is legally allowed to pursue financial recovery from the at-fault party. This right normally belongs to the party that was not at fault in a collision, but is transferred to the insurance company under a provision called transfer of rights of recovery.